This is an MTPredictor weekly update, and I want to start this week, as we have in the past, with the Australian dollar Japanese yen pair here. Again, we had our DP sell-off, got our little ABC pattern here with a TS3 to the short side, and we have this minimum wave C resistance here that you can see. The market came up here, sold off, came up in here, got into this typical wave C area, and this green line 50-day moving average before we got our TS3, and that sold off again here. And if I extend the minimum wave C resistance out, you can see we came up to that area again and sold off. Once again, we've come up, not quite to that area here, but you see it is, made this swing low here. It's come up. We'll see. Here's the 200-day moving average for this pair. Okay, quite a ways away from it still. But we'll look at where the market is here in relation to the S&P 500. And we talked about our AUD-JPY here having a high correlation to the SPX. So we want to take a look at this market and compare it to the SPX. We'll look at the YM of the daily charts to kind of give us an idea of maybe what we're seeing here, what we can expect. So let me just pull up our next market here. Alright, so we've got a few markets we're looking at here. Here's our ES, or S&P 500, actually the mini contract here. And you can say it had the same TS3. We looked at that. I can put the analysis on that. You can see again, the support or the resistance numbers here. I'll extend these out. You can see we've come up into that minimum wave C resistance area. We had the TS3 sell-off. That did go to that target, hit that target, and we did bounce in that area. We've come up, again, approached the 50-day moving average here. They're going to attempt to base above that. And then let me just remove this for a second so you can see the 200-day. You see it also, we haven't gotten quite to the 200-day moving average there yet. Obviously, there'll be a good area of resistance there if the market does continue up and test that area. If we look at the YM here, you can see that the YM has come up, and for the first time, we've tested the 200-day a number of times here before and failed. But this time, a little something different, as we've got a close above the 200-day. And that's the first time the YM has been able to get that close above that 200-day, going back a few weeks here. So we've got that. We'll see now going forward if we can exceed this high. This particular day was the 23rd of July. We'll see if we can exceed that and then make this 200-day now support, and we'll move higher from there. But what we're going to need to see is we're going to need to see the ES follow suit, getting a close above. You can see how the Dow is kind of leading things, at least the ES. We look at the NQ. The NQ also has, closed above its 200-day now, and it's even a little ahead, maybe a little further than the YM. So we'll see if the ES is the big daddy here, if this follows suit or not, or if, like when we looked at the Australian dollar Japanese yen, you see how far away this is from its 200-day. It's got a little ways to climb there, and not close to closing above that at this point. So kind of a mixed picture, I guess, is what I'm getting at as far as the daily goes. With that AUD JPY lagging, is it telling us that any attempts up here, if the ES is going to get up there, are likely to fail, or is the NASDAQ kind of like the foot soldiers? The smaller issues tend to be the foot soldiers and kind of lead things. The Dow is following or trying to follow here. Will the ES follow? If we see all these markets begin to close above the 200-day, then chances are we're going to get another leg up. Obviously, if they fail, we can do our decision point analysis and just give us some areas to look at for potential support. There's our pivot. So a couple of areas to look at there. look at a little ABC pattern potentially happening here in the YM. Doing the Elliott wave analysis with the software here. Our minimum wave C target area, haven't quite gotten up into that yet, so we'll see. We'll also have a decision point resistance off that swing high, that A swing high right in here as well. So this is what I'm talking about. If we're going to be able to exceed the high from Friday there and be able to then make this 200-day support and get through this resistance area, then we've got another leg up, maybe this 10,800 area, which is a typical wave C area. If not, you know, this will test up in here, the ES, and end up rolling over again. And just taking a look at, I'm going to remove this. It's kind of following our gold setup that we had, that DP. Obviously the trend was higher here. We had our decision point short trade there. If I put the Elliott wave analysis, again, we had our wave 5 up into typical wave 5 resistance with the DP. We also had the red high volume spike telling us that maybe the buyers were getting trapped up in here as they maybe were trying to take the breakout trade from this prior swing high, and that's failed. I'll put the analysis on this. Haven't gotten to the target yet, but you can see at this point, if you were trading this particular trade, you'd have your stop now down to your break even, so you couldn't lose your entry. And we'll see if it comes down to the target here, just an area of support in here. That's got to be taken out for that to happen. And then just take a look. On Friday we had another nice trade that again, Friday's trading was excellent, and this is the 3-minute YM here. And we had this automatic TS4 set up, and I put the analysis on that again with one click, and the software let me know we could do 7 contracts with this account, risking $385 with a stop there at 10,255. So just an 11-point stop. Here's our 100% initial risk line. Make that a little larger here. And you can see, even if you once you entered this trade here, if you did move your stop once the price get to the 100% initial risk line, you know, it never threatened that once you moved it up there. In this case, you know, not a whole lot of room, you know, wiggle room here. This one worked out fine, but this may be one where maybe you just leave the initial stop in place at 10,255 since you're only risking 11 points, you know, $385. In this case, like I said, it never did threaten that stop. So either way you played it, it got to the target there, which was a nice healthy 6, better than 6-1 on that trade. But the beauty of it was the STF indicator here, our oscillator, came into the gray band here, which is telling us that the bigger trend is strong, and we want to attempt to hold part or all of the position for more upside. And at that time, we'll go ahead and start utilizing our ATR stop. The blue dots here is where we're going to use our trailing stop, if you will. And the market did get another leg up there beyond the target, and you can see finally did stop out right in here. Okay, I'm going to select the entry, stop, and target here. Click once for the entry, once where I want my stop to be behind that bar, and right here where our ATR stop is. And it gives me better than 8-1, almost 8.5-1 risk reward for a profit of $3,245 on a risk of $385. Anyway, just a nice day. I hope that's helpful, and we'll do this again next week.